What's up, traders? Welcome back to another video. I hope you had a beautiful weekend. So today I want to go through two instruments and look at the textbook setups that they gave us. Now, last week I told you that what's that word? The word I've lost that word, but I had, improved my strategy. Well, by that I mean I am more looking for quality setups than, the quantity of setups that I get. Right now, I can say, honestly, if I get 3 trades per week, I am lucky. Mostly 2, but they are high quality trades, high quality setups. These are setups that, I am very confident in. Now, the steps are the same. We are trading at the high of the day or the low of the day, high of the week, low of the week, high of the month, low of the month. So if we are not at the high of the day, especially at the high of the day, then I am not looking at that instrument because, well, that is my first qualifier. Are we at the high of the day? Now, this blue line represents the high and the low of the day, and coincidentally high and low of the week because it's on a Monday, and the process is the same. Usually the first hour sets the high and the low of the day, of the session. But to me that doesn't really matter that much unless the high of the session and the low of the session coincides with the high and the low of the day. But let's keep in mind we have our high and our low of the session. And during the second hour, this is the first hour, 8 to 9 a.m. New York Standard Time. Now, the second hour, we go higher up to the high of the day, and we break it, and then we come right back in. This is a very fast move. So right now, we have other time frame traders in the market. The breakout traders are in the market. And remember, this is where the money is. I am trading at the high of the day because this is where the money is. So, if this is where the money is, and they've already triggered it, then I am telling myself, well, as you can see, this is at 9:10. The first 15-minute candle in the second hour. So I am very cautious because I know if we have not yet reached 9:30, then there is a very high probability that at 9:30 they are going to come back to the high to stop hunt the people who got in early. So as I am looking at this trade, this is a very, well, for me it's a risky trade, but we are at the high of the day. And that lowers the probability that, even if they come back, they will come back higher. My probability is that they will come back near the high of the day, but they will not break above the high of the day. That is my thesis. So my stop loss is above the high of the day, maybe 5 pips above the high of the day. That was around 25 pips. And my target 30 pips is not bad. And as you can see, at 9:30 they came back. But I was expecting this. and yeah, so it was around 25 pips. And yeah, it was a long process. This was a very long trade, but eventually it gave out. Now, this is gold at the high of the day. What were we looking for? We were looking for, are we at the high of the day? Yes. Have we triggered other time frame traders? Yes. Do we have that M structure? Here it is. And we broke structure. So what I was looking for was a retest and an engulfment, and this was the engulfment for the move down. Simple as that. Simple as that. If the market does not satisfy what I am looking for, then I'm out. I'm not looking at that market again. Why would I risk it? Why would I risk my money if it is not giving me what I want? Now, let's look at oil. So oil gave us a textbook setup yesterday for, a good, easy money. So, as you can see, this red line represents the high of the day. The low of the day is down here. Now, the procedure is the same. We are only trading when we are at the high of the day or at the low of the day. Now, the first hour sets the high and the low of the session. Okay. After that, the second hour continues going higher and we break above the high of the day. And then, we break structure. So we have our M pattern here. Came and then continued higher and then we broke structure. There is our M pattern. There is our M pattern. And the break of structure. Now, once you see this structure, they break structure at the high of the day. No, they are on their way to lock in the high. So during the retest and the engulfment, once they put that engulfment, that means they have already locked that high. They are not going past higher than that high until they come and collect the money down here. So we are looking for the retest with the engulfment. Still no engulfment. Still no engulfment. Bah, there is our engulfment at 9:44, 1 minute prior to the open of a new 15-minute cycle. So our entry is just at the close of that engulfment. Now, for our 30, 40 pips, 50 pips, I don't know if it went 50 pips, but right now I am not, I'm contented with 30 pips. I think maximum I am taking out of the market is 30 pips. Because, well, I realized even though the market can be generous, and I have understood myself, and I know that I don't like to stay in the market for that long. So if the market gives 50 pips, well and good. But I am very comfortable taking 25, 30 pips. I'm out. 25, 30 pips. If I get 3 trades that give me 25 pips on each, that is 75 pips of profit per week. 75 pips, that's a lot of pips. That's a lot of pips. So, hopefully you got value from today's video. Stay disciplined, stay focused. Continue, understanding who you are, because trading is not about the market. It's about you. It's about who you are. The more controlled you become, the more insight you get from the market. So, see you in the next video. Stay disciplined, stay focused. May the markets go with you.